because we've got a great conversation to have today, and obviously we've got a lot to get through. When you talk about transition, when you talk about climate and nature, you know, we were looking at our panel overlay as we always do and thinking we could talk about this for days. So we're going to try and go through this conversation. We really are going to focus on financing transformation for the 2030 goals. And so this is that question, which we'll grapple with multiple times over the coming 2 days, of how do we unlock finance for transition. And we're going to talk about climate and nature because, as many of you know, those two worlds are inextricably linked and getting more and more linked in our conversation over time. But let me introduce our panel and then we can get into it. So I've got a fantastic group with me here today, both in person and virtually. We've got Alison with us. I'm going to introduce Alison first. She's joining us virtually. She's the Managing Director of the Nature Conservancy in Australia. Her career spans 2 decades in environmental sustainability, and she has deep global experience basically across the space. Whether we're talking renewables, ESG strategy, climate mitigation, she's done it. So she presently leads conservation initiatives that protect biodiversity, address climate change, and support human wellbeing as a core part of her role. She was previously the CEO of the Australian Energy Foundation, where she worked with all levels of government, industry and academia and the social sector to build investment and action for climate mitigation. And before that, she was Global Executive Director of Sustainability at Fujitsu. So she's had quite a bit of experience across the space. I've also got Christina Tonkin with me, who is the Managing Director of Corporate Finance for Institutional Banking at ANZ. Corporate finance at ANZ includes both sustainable finance, which obviously is a huge topic today, but also holds the institutional relationships with the resources, energy and infrastructure sectors, which are central and critical to this conversation. Previously, Christina has 25 years of experience in specialised finance and loan syndication, and she joined from Westpac Banking Corporation. She's held several roles within the institutional banking loans business. She is also the Vice President of the Executive Committee for Women in Banking and Finance and a member of Chief Executive Women. I read these bios out and everyone feels a bit overwhelmed by them, but I'm just going to keep going because we can't leave Simon out. So Simon O'Connor is a long-serving CEO of RIA, which, for those of you who don't know, is the Responsible Investment Association of Australasia. Simon works with RIA's 500 plus member organisations, and they represent over US $29 trillion in assets, which what's that? Order of magnitude larger than Australia's GDP on a given year. The goal of RIA is to align capital to achieve a healthy and sustainable society, environment and economy. Simon is an economist and environmental scientist by training, and he's been at the intersection of economics, finance and sustainability through an extensive international career, which has included roles as an economic advisor, an investment analyst and a sustainability consultant across a number of sectors. He is he's the chair of the Global Sustainable Investment Alliance and also co-chair of the Australian Sustainable Finance Initiative Steering Committee closer to home, which of course has got the challenge of trying to figure out how on earth we do all of that exciting global stuff here, which is no small piece of work. But we've got half an hour to talk through this very big topic today, so we'll get kicked off. And I'm going to start with you, Simon. So we hear a lot about finance, I use that term very broadly, acting on climate and nature, but we also hear a lot about greenwashing, business as usual, it all being too hard, it all being a bit difficult. What are you focusing on? What's the interaction with the capital, with the investment sector, particularly at RIA at the moment? How are you looking into those set of challenges?
So I think as we sit here today, it's fair to say that the rubber has hit the road and stuff has gotten real. Like, as we sit here in 2022, many of the really important pieces we needed to signal to capital to start flowing towards that, supporting that low emissions economy, are now in place. And we've seen, I guess, over the last 18 months to 2 years, that acceleration of the financial sector and capital markets here and globally really pushing to drive and support this low carbon transition. We now have the global agreement under Paris, we have legislated targets here, we have a vast proportion of our major asset owners here with net zero commitments, a big part of our ASX 200 with those same commitments. We have TCFD disclosures crossing a major part of our market. So really these are the building blocks that provide us the information that give us the ability to actually assess our progress against the stuff we need to achieve by 2050. And I think that has made things very real for finance. All of a sudden it is quantifiable, it is comparable, it's in front of those quants out there who are doing the numbers, who can measure progress and who can then be scrutinised on that progress. And so the screws are very much tightened, and we're seeing that translate very immediately, as of now, as of this year, into how investment management accounts, segregated accounts, funds, banking, etc., credit risk and others are actually calculating risk. And what that's resulting in is capital is shifting. Capital has finally shifted and is in the process of shifting away from the harmful, the high polluting activities, preferentially wanting to flow towards those greener, low emissions activities. And we're far from being done here, right? So I don't want to overstate this, but I kind of consider this like, if you watch those enormous ships moving about in Sydney Harbour, and they're really hard to move, they're really hard to shift direction, but once they start moving that direction, they're effectively unstoppable. And they're really slow to get up to speed, but once they start heading that direction again, that acceleration is absolute and it's only going to increase. And so I think we're in that position now where the direction has shifted. We're starting to accelerate at a slower pace than we need. We're going to need everything behind us, but what's fundamentally different is we're now sailing with the tide rather than against the tide. And so I think that is a really important and kind of exciting nexus that we're at right now. The question, of course, is it fast enough? Is it enough? Are we going to hit 2050? All of those things which we can unpack. But I think in that last 18 months, we've seen a fundamental shift. But to greenwash that you throw in there, that is now our risk, right? We're in that window where there's the opportunity for greenwash. And I think also that I'd say that window for greenwashing is rapidly shutting on us. We're going to see some people taken down through enforcement measures by our regulators, consumer regulators, financial regulators who have put this very squarely on the radar. They are now scrutinising this. So do not be out there with unsubstantiated claims as to what you're doing in green, environmental, low carbon space, or you can expect the regulators to be knocking at your door. So I think that window is shutting. I think there's a risk right now in that interim period of a credibility impact for all of this activity. But I think the momentum is such that we're starting to head in that right direction.
Christina, I'm going to come to you on this because obviously you're looking into this from banking capital markets, which is this massive, and certainly at some of the initial conversations that we had about listed companies and mandatory disclosure and the like, it's not as visible, but this huge moving giant that's sort of sitting around that system. What motion are you seeing there, and how is ANZ engaging with that?
Yeah, thanks, Zoe. And I might sort of start with probably kind of three areas. Speak a little bit about ANZ's journey, what we're seeing with our customers, and indeed, the broader finance sector, and, the importance of forums like this in bringing all different voices together. So at ANZ, really, probably the journey around environmental sustainability began many years ago, back in 2006 when we signed the Equator Principles, which are some of the standards that govern lending in project finance. It then continued actually with a lot of valuable work done in partnership with WWF around establishment of sensitive sector policies internally around lending, culminated in really ANZ coming out in 2015 with statements around climate and indeed around an initial target to work with customers on decarbonisation, and also with the issuance of our green bond, reflecting, of course, a lot of investment that had gone on for many years in the renewable space. Since then, it's kind of accelerated in terms of signing up to report on the TCFD, being a forum member on TNFD, and of course working with a lot of organisations, including importantly ASFI, which is the Australian Sustainable Finance Institute, in working with banks, investors, indeed the regulators, to come up with a sustainable path. So you've seen that kind of grow. We have currently a sort of 50 billion target to fund and facilitate. That excludes residential, so it's largely with corporate style customers. We've just announced last week that we've just surpassed 40 billion in that, and so you can see that's rapidly growing. For those that want to have a look, ANZ did disclose last week, it's on the website, and it does talk about all the sort of different areas. I think with customers, bearing in mind that we bank right across from institutional corporate customers, investor customers, down through, very importantly, the business banking and SME and down into the retail space, is that this has really become, probably alongside issues of digitisation and cybersecurity, the number one topic of engagement with customers. And it's less now about why we're doing this and why we focused on this, but far more pleasingly about what we can do about it. So indeed, the ability for the finance sector and banks to partner with our customers right across different sectors and in different regions to deliver tangible solutions, and I think particularly in the nature positive space, I think is very pleasing. And then, of course, back to what Simon was talking about in terms of these issues of balancing, the needs to avoid greenwashing, but also not wanting to end up in what I heard last week, as I liked as a term, green hushing, stopping organisations wanting to actually transform, I think is kind of paramount. So sort of all the work that's getting done with ASFI and various different groups, whether it's the Investor Group for Climate Change, etc., is kind of critical to driving taxonomy and a pathway forward.
Thanks for that, Christina. I'm going to come to you, Alison, because we've touched on nature. We're talking about the interaction of climate and nature here. Obviously, there's this, we're having a conversation at the moment where we're sort of figuring out how to turn the boat on climate, and nature is the next big thing out of the gate. I'm going to try and keep this maritime metaphor going. But we are looking at nature, capital markets are looking at nature, getting very excited and starting to move down that path. How are you interacting with that financing question at the Nature Conservancy, Alison? Can you give us a bit of colour on that front?
Yeah, thanks, and good morning, everybody. And just to add to the maritime theme, I was in the Navy, so I have driven one of those ships out of Sydney Harbour Heads and can attest to how difficult it is. But I think we are sort of starting to see this very emerging theme around that we can't separate biodiversity and climate. And whilst most of the focus has been around climate, and we know of the Fortune 500, 83% of them set a net zero target. Less than 5% have set a biodiversity loss target. And that's probably pretty similar in Australia, although trailing. So for us at TNC, we're focusing on 1.5 degrees as a key indicator of success, but also 30 by 30. And it's fantastic that Australian government has now signed up to the global movement of committing to 30% of our lands and freshwater and marine space protected by 2030. And that's a key driver for us at TNC. So I think really what we would like to see in terms of momentum is to get nature and climate onto an even playing field, to really shift the dial on understanding the link between those and that you can't trade off one without the other. And that, in order for us as people to thrive, we need to balance our world and look after and prioritise those both together. So, for us, we work around looking at really large scale activities at TNC. And really system change, and we're very fortunate to have 500 scientists on the team. But we also know we need to look at what the new nature economy is, and I agree it's not just climate as a separate issue or nature, it has to be around integrating the economy, and it's a pretty exciting time, so I'm definitely on the momentum ship with all of you, but can we just make sure that we've got climate and nature both steering ahead? Thank
you, Alison. So I want to just talk a little bit more about some of this momentum we're seeing before we talk about some of the things that we've got to fix to, now the ship has turned, to get the ship to where it needs to go. I will flog it. Simon, we are having a lot of conversations here at the moment about mandatory disclosure. We throw around ISSB, obviously we've got TCFD, we've now got TNFD. We've just had the UN high-level expert group release its recommendations on net zero pathways for non-state entities 2 days ago. So we've got this pile of, what a company should and shouldn't do and what an investor should and should do that's building up. How do you expect that this is going, what is this going to mean for capital providers and also for the volume of finance that actually moves on this theme?
And I think that's ultimately how we're going to measure the success of these, right? It's actually the volume of finance. And I think what's at the core of it, none of these are silver bullets, and any of these disclosure frameworks are agnostic tools. They don't tell you must do better or worse or improve or deteriorate. They merely lay out data, but they're critical as part of those building blocks in terms of putting in front of from where I sit, the investment community, to lay bare those risks as they sit across an economy. And the hope is that then that starts driving a shift away from risks and towards the opportunities. And I think for me, the comparison is the TCFD. We're now about 7 years since the outset of the TCFD, and we're at that point where we've got very high take-up. We would like to see that mandated in the Aussie economy, but we've seen that in many other countries mandated for that disclosure. And we're now at a point where we've got comparable, rigorous, robust data coming through such that it can inform the investment decisions of capital providers. And we're starting to see that the cost of capital, therefore, is rising for the dirtier, more emissions-intensive, more exposed companies and reducing for those greener, lower emissions companies. And I think that's ultimately how we want to see those play out. And so this standardisation is something that is long overdue for how we disclose our sustainability reports and ESG reports and data. And so I think the ISSB has had a really strong support as a global framework, effectively of the status of an accounting standard internationally. And it's been great to see that convergence underneath it of all of these other frameworks, GRI, integrated reporting, etc., coming in to support that. And hence it's been really pleasing to see our regulators working really hard to support that already in the Aussie context. And we'd like to see that coming through as being mandated in due course as well. And ideally then you see a TNFD come through with nature-related risks, and it also, we think, will move much faster than a TCFD in the Aussie context and globally. The rail tracks are laid. Damn, we're moving on to transport mechanisms now, aren't we? From TCFD that had no tracks in front of it. We now know how this is done. So TNFD will follow closely behind. And it might be 3 to 5 years where we see that really starting to get traction as shift in the direction of capital towards more nature positive assets. Whether that's in time, fast enough, probably not enough. Alison, defer to you and the experts there, but I think it's a really important part of the sort of building blocks we need, the infrastructure we need, such that the credit risk teams and the investment analyst teams can sit down and compare and contrast the data and the assets and the companies in front of it and lay that bare.
So Alison, I'm going to come to you now because, Simon's just talked about how we've got this set of infrastructure that we've sort of partially built for climate and we're sort of pivoting it, bringing it into nature. Nonetheless, there are still some significant concerns coming up about biodiversity markets, about the interaction of capital with nature. There's some really large unanswered questions there. Do you see that shift in attention affecting capital flows yet?
Yeah, so I think we're getting a lot of sort of questions around, when will the TNFD be in the market, and is that really the silver bullet that's going to drive everything? And the answer is not. What we are seeing is that people absolutely want to understand natural capital accounts. They want to understand their risk exposure. They certainly want to get nature onto the balance sheet, if I can put it as simply as that, which is still considered externality. But the question is, what are the financial products and the instruments that are actually going to drive the shifts of capital? And when we start to think about nature or biodiversity, it doesn't have a simple market like carbon does. So when we look at climate, it's much easier to just sort of think about carbon and come up with a price. But nature is far more complex. So what does make up biodiversity? We think about those ecosystems and how do we put a value on ecosystems? How do we make sure that the capital flows to the right biodiversity, which is the most critically threatened? How do we also ensure that what we're doing in terms of biodiversity is not trading off climate action? And it is a really, I guess, a challenge for us. And what we hear is that the projects that we've got aren't big enough to be of interest to capital investment. So how do we start to aggregate projects? And a good example of that is blue carbon, where that's going to be sort of amazing for Australia in terms of our coastline, but the projects will be quite small. So aggregating to meet the demand from investors in biodiversity, getting the right representation, and we don't have as good data on biodiversity as we do on climate. So we absolutely don't have time as we had with the TCFD, with the TNFD. That needs to be accelerated and into the market, and we need to be shifting the business models much earlier. The recent report that TNC did with some of our partners indicated that we've got over about a $700 billion gap in biodiversity capital each year between now and 2030 to restore nature to be at a nature positive trajectory. So it's a pretty big number, but what we need to do is create those projects at scale to aggregate and to create the financial instruments and not just rely on one or two things that we think is going to shift in time.
So making this real is something you have to do day to day, Christina, because you've got this set of existing support client relationships, you're sort of well and truly within the institutional function of a giant bank. When we talk about this, markets and how's it going to move capital around, how are you experiencing this on the ground in your relationship with customers and in their sort of willingness and interest in moving?
Yeah, I mean, what I'd like to definitely assure everybody in this room is there's absolutely no lack of finance capital to work with customers and on quality projects. So it's really this sort of absolute kind of ability to get clients together, customers from investor customers, energy style customers, consumer customers, and our landowning customers, both Indigenous customers importantly, and also, the agricultural community across Australia, to look at how do you come up with high quality, tangible kind of projects. And, that is something that's been definitely at the forefront of thinking within ANZ, and indeed led to us investing $50 million US in Pollination earlier this year, of which Zoe, of course, is a partner, to partner effectively and invest in a company that is providing strategic and indeed transactional advice to customers on their decarbonisation kind of journey. So to me, certainly Simon's very articulated the kind of complexity around reporting and disclosure, and it is incredibly complex. And, this topic does come up a bit about targets all the time within banks, and you've got at this moment in time lots of different targets out there, different measurements. The thing I do say to people is it's a target, it's not a credit card limit. I'd be more than happy to exceed that significantly. It's about exceeding it with quality projects that are actually going to deliver outcomes. I do think one of the areas that the finance community can engage more is a lot more with the scientific community, particularly in this country. There's, huge amounts of data and information and talent within the university sector here in this country, and I'd like to think over the next few years that type of potential can be unlocked a lot more in working with the finance community as we double down on trying to really achieve some goals by 2030.
So I'm going to follow up there because I want to we're sort of coming into the back end of our discussion here. As I said, it's a really fast discussion for a really big topic. We're going to go just a few minutes over, but I want to come to you again, Christina, because we've been talking a lot about nature, but obviously there is also this huge industrial transition task that we're looking down the barrel of. Now we're going for military metaphors. It's going to be expensive, it's going to be difficult. It requires a level of corporate ambition and also collaboration that we haven't quite had to marshal before, except in a few other circumstances throughout history, but we don't do it much. How do we approach financing serious industrial transformation?
Yeah, well, I think that, and probably Jennifer Westcott did speak to this on the previous panel, that that kind of engagement between finance and the business community again is sort of paramount, because it does require a lot of industry change. Particularly when you're starting to look at what is happening in energy systems, which we all know are extremely complicated, and that's definitely come to the forefront at the moment with rising prices and energy security, which is cutting across and impacting. So I do think it is that continued dialogue between the regulatory bodies here in Australia with the different state and federal government, with the investor community and with the business community to look at what the key areas are and what is the prioritisation, and have a lot more of a kind of Team Australia approach to it, dare I say. I think that is kind of super critical for us over the next decade. I think the urgency is kind of here and the platform is here, and I think the solutions are here. It really does require people sort of coming together, and as I said, there's really no lack of financing available for these types of projects. It's about, you know, the commerciality of that and about the sort of risk allocation for that. It's quite critical because we have a lot of hard to abate areas out there. It's probably a lot of people are flowing in here today. So if you look at hard to abate sectors like airlines, you know, the development of sustainable aviation fuels or sustainable marine type fuels is going to be kind of critical.
So I'm going to, on that question, I'm happy to hear the Team Australia piece. We've been doing a piece of work lately looking at what are the characteristics of jurisdictions that do this well, and I think Team Australia sums it up, so that's nice to hear that there. Alison, you talked about the size of the financing gap for nature. It's hundreds of billions of dollars. Riffing off what Christina's just said, what's in your mind is what we need to get that going? You mentioned that we need aggregation, we need to deal with scale. You know, if you did have a silver bullet here, what would it be?
I think my silver bullet would be to change the mindset around the opportunities. So we absolutely know that there's three sectors that contribute to 80% of the nature loss, and that is agriculture, infrastructure and energy. Let's focus there together. There is a massive opportunity. If we sort of really invest in achieving nature positive by 2030, the World Economic Forum has said that will actually bring $10 trillion to the economy and create sort of 395 million jobs. If we can shift our mindset to start to be optimistic and come together and collaborate, and I agree with Christina, around Team Australia, and not separate these things and start to go together, I think we've got a massive opportunity. So mine is mindset. Let's tackle this and let's create this beautiful world where we all thrive.
Fantastic. So Simon, I'm going to come to you to close, because you know we've talked about this industrial transition, we talked about nature, but we are starting to hear things, you know, that are put into the mandate of capital markets that are things like supporting innovation, rapid proactive innovation like we haven't had to do before. Resilience, we haven't talked about resilience. We have these massive transition needs in emerging markets which are starting to come into the remit of the classic developed country finance provider. When you look at this landscape of problems that, you know, keeps throwing up more problems, what do you think the role of institutional finance and capital markets is solving these problems going forward?
When I look at that list, I see huge gaps, ultimately. I see gaps where capital's not flowing to support, where we're going to need capital to flow to support. So I think we're going to need action at all levels of the capital value chain, and there are big gaps that need accelerating massively right now. I guess what I'm encouraged by, what I'm hearing here today is, you know, the capital is there, there's a demand there, it's starting to flow. I think just add into that, you know, what we know very clearly as well, and Christina's told us this, and we see from our own research, is consumers want this. They, you know, when we survey consumers, 80% of Aussies say they want their financial institutions to be taking stronger action on net zero, on emissions reductions. So they wanted that to be part of the solution. And I'm really encouraged by that engagement by consumers and the retail side in this area that are starting to shift finance as a critical driver as well. And so when we see that come into play, with all those pieces falling into place right now, I'm encouraged that I think capital will start flowing to fill those gaps. And I think that's what we need to keep doing. And what we're starting to see is the early stages of that acceleration of capital flows. So in the last year, our research will show that flows of capital into sustainability, thematic funds and investment products have doubled to the over $150 billion of assets in just a year alone. And so that is why I see that switch is real, it's commenced, and we need to consolidate it and accelerate it.
Fantastic. So to take into the conversations that we go through the day, we sort of hear that we are seeing those flows. The boat has turned. I think what Simon didn't say is shit is real. We really need to continue to sharpen our focus on opportunities on this as a you know, a combined opportunity to do something new and different and more valuable rather than just a risk. We've got to think about it as Team Australia, and we've got a lot of consumer and public support. So I'm going to thank our panel, thank our audience, and hand back to our MC to continue to take us through this journey of trying to figure this out in 2 days, which is good fun.
Thank you.